Hey everyone, welcome back to Corporate Decoder, the place where we decode those confusing corporate filings. Sometimes companies just drop reports and expect us to understand them. Today we're diving into PROG Holdings Inc. and let's just say they've got some news that's going to make you want to pay attention. Make sure you're subscribed and join our Discord community for more exclusive insights. So PROG Holdings Inc., the company behind brands like Rent-A-Center and other rent-to-own services, has just dropped a current report. Think of this like a major announcement for the company. What's the big deal? Well, they're telling us about their latest financial results. It's basically their scorecard for the last few months, and we're going to see how they've been doing. This report is filed on July 23, 2025, and it covers their performance up to the end of the second quarter, which was June 30th of the same year. Now, PROG Holdings is a publicly traded company, meaning you can buy a piece of it if you want. Their stock trades on the New York Stock Exchange under the ticker symbol PRG. Knowing this helps us understand the impact of their news on investors. The real meat of this report is about their results. They've announced their financials for the second quarter of 2025. They put out a press release which is attached to this filing. This release is pretty important because it tells us how the company is performing financially. This exhibit number 999.1 is the actual press release. It's like the company's own summary of their performance. We're going to focus on what they're saying in there, but also remember that this information and the press release itself isn't considered officially filed. In the same way some other documents are, it's more of an announcement that they are sharing. They also included an earnings supplement presentation. This is usually a more visual breakdown of their financial numbers, lots of charts and graphs. This is where we can often find the most telling figures, so we'll be digging into that presentation. And who's signing off on this important news? It's Brian Garner, their Chief Financial Officer. He's the guy who knows the numbers inside and out, and his signature basically means this is the official word from the company. Now let's talk about what's really going on with PROG Holdings. The filing itself is a bit dry, mostly formalities, but the earnings supplement and press release are where the story unfolds. Since this is an 8K filing focused on current events, the big news is their second quarter financial results. While this specific filing doesn't contain detailed financial tables within the 8K itself, it points to the attached exhibits, particularly the earnings supplement presentation as the source of that crucial data. Think of the 8K as the cover letter announcing that the real detailed report is inside the envelope. So our analysis will draw from what's typically presented in such an earnings supplement for a company like PROG Holdings. Generally, in a rent-to-own business like PROG Holdings, we look at things like same-store sales growth, which is how stores open for at least a year are performing. We also want to see the revenue from their different segments like furniture, appliances, and electronics. Profitability metrics like operating income and net income are key. And we also want to understand their debt levels and cash flow. For PROG Holdings, a company that has gone through significant changes, including acquisitions and integrations, understanding the underlying operational performance is really important. Are their core businesses growing? How are they managing costs? Are the integrations of any past acquisitions paying off? Let's imagine what might be in that earnings supplement based on typical reports. We'd likely see a comparison of their current quarter's performance against the same quarter last year. For instance, if they reported revenue of say $500 million this quarter, and last year it was $450 billion, that's a pretty good sign of growth, about an 11% increase. That means they're bringing in more money, which can be a result of selling more products, increasing prices, or expanding their customer base. We'd also look at their customer numbers. If they said their customer count increased by, let's say, 5%, that's generally positive, suggesting they are attracting and retaining more people who want to rent their merchandise. However, if that 5% customer growth came with only a 2% revenue increase, that might mean the new customers are spending less on average, or perhaps they're acquiring customers at a higher cost. Another critical area would be their operating expenses. If their rent to revenue ratio is increasing, it might mean that the cost of maintaining their inventory or the cost of servicing their customers is going up faster than the revenue they're generating from those customers. This could squeeze their profits. Profits themselves are, of course, the ultimate indicator. If their net income after all expenses and taxes has grown significantly faster than their revenue, that's a strong sign they're managing the business efficiently. But if profit growth is lagging behind revenue growth, it signals potential issues with cost control or pricing power. Maybe they're having to discount more heavily to attract those new customers, or their operating costs have risen unexpectedly. Let's consider their diverse business segments. If one segment, say furniture rentals, is booming with double-digit growth, while another, perhaps electronics, is struggling with declining revenue, it paints a mixed picture. It shows where the company is strong and where it needs to focus attention for improvement. Now, thinking about external factors, the economy plays a huge role. Rent-to-own businesses often do well when traditional credit is harder to get or when consumers are being more cautious with direct purchases. So, if the economy is a bit uncertain, PROG holdings might actually benefit from people choosing their flexible rental options. However, if inflation is high, it can also make it harder for their target customer base to afford those rental payments, potentially leading to higher delinquencies. When we look at the numbers, we're essentially trying to answer, is PROG Holdings a well-oiled machine, or are there some rusty gears? Are they strategically making good decisions, or are they just reacting to market conditions? The devil is always in the details, and these reports, even the summary ones, give us a glimpse into that reality. Overall, PROG Holdings operates in a competitive space. They are up against other rent-to-own operators, but also traditional retailers and online marketplaces. Their strategy likely involves leveraging their existing store base while expanding their online presence and customer service capabilities. Success often hinges on managing their inventory effectively, controlling repossessions, and maintaining strong relationships with their customers. To get a true sense of their current standing, we'd need to see those specific numbers from the earnings supplement. Is revenue up or down? Are profits growing or shrinking? How are their customer acquisition costs and retention rates? Are they paying down debt or taking on more? These are the questions that a deeper dive into their financials would answer. For example, if the presentation showed a sharp increase in their allowance for doubtful accounts, that would be a red flag, suggesting more customers are struggling to pay their bills, which could impact future revenue and profitability. Conversely, a significant increase in free cash flow would indicate they have more money available to reinvest in the business, pay down debt, or return to shareholders. At the end of the day, PROG Holdings is navigating a dynamic market. Their ability to adapt to consumer trends, manage their financial health, and execute their growth strategies will determine their long-term success. This filing is just one snapshot, but it's a crucial one that many investors and analysts will be scrutinizing closely to understand where the company is heading. So what's my take on PROG Holdings based on this filing, or rather what this filing announces? Without the explicit numbers from the earnings supplement here, it's hard to deliver a verdict. But the very act of filing this 8K to announce their results shows they are communicating their performance, which is a necessary step for any public company. The key for PROG Holdings and for us as observers will be to look closely at that accompanying earnings supplement. That's where we'll see the trends, the growth drivers, and the potential headwinds. Are they growing their customer base sustainably? Is their profitability improving alongside revenue? These are the core questions. The rent-to-own model is sensitive to economic conditions and consumer confidence, so their ability to manage through varying economic cycles is a key indicator of resilience. Alright, that's our quick decode of this PROG Holdings filing. What's your perspective on companies like this? And what key financial metrics do you watch most closely? Let me know in the comments below. If you found this breakdown helpful, please give this video a like and subscribe for more regular dives into corporate filings. And don't forget to join the conversation and get more exclusive insights on our Discord channel linked in the description. Thanks for watching, and I'll see you in the next decode.